Hello, everybody, and welcome back to the Tax Hacks Podcast. I am your host, Trevor LaParle, back again, and of course, accompanied by my full-time guest, Kevin Brenner. Kevin, how's it going today?
Good.
Sweet. And then, of course, we do have a new face for those of you guys that are watching, Christian Ramsey. Christian, thanks for coming on today. How's everything going?
Pretty good so far. Thank you.
Good so far. We love to hear it. So, for those of you who haven't met Christian, Christian has a strong background in the financial sector. He's an expert in everything capital gains tax related. He's trained attorneys, CPAs, realtors, you name it, he's done it, and more, and how to defer these taxes in a completely legal fashion. So, today he's going to train all of us on that exactly, but more specifically, our friends of the cannabis and agriculture sector. But before we get into that, Christian, give us some more insight into you, and then we'll hop into it.
Oh, great. Well, I'm not an attorney and I'm not a CPA, but I was a CE provider for the California Department of Real Estate and the Board of Accountancy for a series of continuing education classes regarding capital gains deferral techniques. And I did that for about 8 years in 2005 to 2013, plus minus. So taught realtors, CPAs, EAs, CCIMs, professional investors, just nuances that have occurred over time with regards to every technique available under U.S. tax law for U.S. citizens to avoid capital gains tax or defer.
Love it. And today, like I mentioned, we're going to talk about, the cannabis farms and, of course, any other agriculture in general. Why is cannabis kind of the hot topic right now in terms of these farmers trust setup, and why is it so beneficial for them?
You want to take that over, Kevin?
Well, one, cannabis, they're not allowed to take a lot of deductions under federal law. So they just tax them on their gross sales. So it's not quite exactly that way, but pretty close. And so let's say they sold $1 million crop, but they had 600,000 expenses. They could have taxes based on 800,000 instead of the actual net of 400. So they get hammered on taxes. So the states and the feds say, okay, you're going to do this business. We don't like it. Voters spoke. We're just going to tax the hell out of it. So using a program like ours can, because that is still an agricultural crop, defer the tax for 30 years so they can pay it with inflation depreciated dollars in the future. So it allows them to get back about 96% of what they would have paid in taxes.
Yeah. And I'll throw in a quick little
Got it.
tidbit
And so when you
that's
say,
super important.
Yeah.
So super important
Go ahead.
when you register your SIC codes at the banks, and you say you get paid from a revenue based on, certain types of horticulture. The banks may or may not allow your business, and if you actually use some of the other programs out there, you get larger banks to issue standby letters of credit and finance the money back to you. And this is not money laundering. This is reclassifying income in a way that's acceptable.
Got it. And so how does this process kind of like work? I know we kind of went over the general umbrella of how beneficial it is, but when you're saying, sell the crop instead, is it like, you're selling it to the trust, or how does this kind of go about?
It's a form of factoring. So if you sell your crop, you get an invoice for that. So you assign the invoice to the trust, CB Farmers Trust. And CB Farmers Trust then finances that back to you. So when the money comes back, it's coming from a trust. It's a loan, a 30-year zero-wash loan from a trust. So when that money comes back, it's a very different SIC code, as Christian said. So that lands in operating accounts that are not associated with the cannabis. So the cannabis people have a hard time doing banking. Again, the feds don't like it. The feds don't like that the states have legalized it. So the banks are connected to the feds through the Federal Reserve, and they, basically create bottlenecks for them to make it difficult for them to do business. Well, when the money comes back, it is legitimately coming from a trust as a loan, and that lands in a separate operating account. So it's a very different. You can set up a separate operating account to receive those funds. Makes it a whole lot easier for them to both do banking, and then from that operating account they can pay bills. So it's a whole lot easier. So the money comes from that no name bank that will accept cannabis money, and it comes to us, and from there it goes back to a different operating account. I mean, that's one way you can do it. So as Christian said, it's not money laundering. It's completely legal, straight up. It's right in the tax code how it's done.
And is there any limit for the amount of times you can do this? Is it like, maybe like a 10-year note, or is there, is it forever, indefinitely, or how does this kind of go
It's
about?
a 30-year note, but there's no limit. You can't go past 30 years. But Christian has an example where who was that did $1 billion deal?
Well, in 2004, the Boise Cascade Company actually sold off most of their timberland and milling products through this particular program, not the one that we're doing, but one similar to Dearborn Madison, which then became Office Max. And that was done in 2004. And I believe the total sale price was around $3.5 billion with a B.
Wow.
And they didn't pay any tax on that. It was deferred out, and they got the full use of the money post sale. That was for a sale of assets, not just the crop, but the tax code is the same. It doesn't recognize any difference versus the crop and the sale of the asset.
That's a lot. That's a huge purchase. So for somebody who's, in the 10 to 15 million, that's nothing to, bat an eye about when you have someone that's doing it for 3.4 billion or 3.5,
Let's
whatever you
just
said
say
there.
that corporate America uses this tax code every time that there is a sale of timberland, farming assets, anything. They will always use this program. We've just managed to bring it down to a smaller level to give it access to, you know, somebody that isn't part of the Fortune 500 family.
Got it. And then also too, I know we talked about it being kind of like a loan that goes back to them. Is it like, a loan that goes directly into the bank account? And then for stuff that's inside that loan, I know you said it's around like 95, 96%. What is the part that's taxed, and why is it not like 100%? That's not, I'm not sorry, not taxed. The amount that isn't taxed, why is it not 100%?
Oh, I was waiting for
Well,
Chris.
I'll jump in there. Yeah, it's an asset, and basically what you have is you have an installment obligation where you're allowed to use the installment method for the sale of an asset. And what that means is that if you do not accept the full payment up front, you accept it over time, your capital gains is deferred. That's not quite what we're talking about, but it is directly tied to it because when you violate the installment method rules, that is called violating the pledge rule. Now, the pledge rule allows you to monetize that installment note with a bank in the form of a standby letter of credit or loan, where they will give you essentially 95 to 96% of the amount of money that you're attempting to defer. They'll give it right back to you in the form of a bank loan. That's what we're talking about. And the pledge rule has a specific exclusion specifically for farmland or certain types of agricultural products or crops.
And then when you say that too, I know we talked about it a little bit earlier prior, but it has to be the raw plant, right? So why can't it be, let's say you have a distributor that gets it and then they sell it in maybe like a pen version, or they have the edibles too. What's the big difference there in terms of the difference in the sale?
Well, tell you what, I'm not an attorney or a CPA, but I will quote for you what the IRS says in their own publication. And this is directly from IRS Pub 537, which talks about the pledge rule. And we're going to be quoting section 232 for the term farm. Okay. And I don't have this memorized, so I've got to, turn over and read this. But it includes stock, dairy, poultry, fruit, fur bearing animals, plantations, ranches, nurseries, ranges, greenhouses, or other similar structures used primarily for the raising of agricultural or horticultural commodities and orchards or woodlands. And for the term farming purposes, what we're talking about is cultivating the soil, raising or harvesting any agricultural commodity, including shearing, feeding, caring, training, management of animals on a farm, handling, drying, packing, grading, or storing on a farm any agricultural or horticultural commodity in its unmanufactured state. I think that's the key you're looking for. But only if the owner, tenant, or operator of the farm regularly produces more than one half of the commodity so treated. And that's directly from the IRS. And I can give that wording to you for, distribution, however you might need to in the small print of this particular podcast.
So you can sell the pigs to the place they're going to be butchered, but you can't sell the pork once it's cut up this way. So, so once it's been processed, so it's got to be the raw thing. You can sell the wheat. You can't sell the flour this way. So the wheat farmer can defer the tax on the crop when he sells it to the granary that's going to grind it up. But once it's flour, no, that's separate. So, case of cannabis, they can sell it before it's processed. Once it goes to the processor that's going to extract the CBD oil and press it and do all the other things they do, then once you've got that oil in the vial, that can't be deferred this way.
Where are the biggest cannabis farms, by the way? A little bit off topic, but just out of curiosity, where are the biggest cannabis farms in the country?
I don't know.
If you guys know offhand.
I'm thinking Oregon.
Really?
Well, I know there's a lot in Oregon, and we know people in Oregon. And, of course, you got Humboldt County. They've been growing pot up there since the 60s. So. You don't walk into the woods too far in Humboldt County. So, I don't know, Christian.
Your guess is as good as mine. I know they want a full-time growing season, and I know that it makes sense to have it more in grow houses than outside. Yeah. So I think it's a question of wherever it's most profitable and legal by jurisdiction.
Along the coast here, north of Los Angeles, they have these greenhouses that used to grow orchids. Huge orchid distributor, and those greenhouses are all cannabis now. Make more money growing cannabis than growing orchids. So,
also, too, I know the taxes are, for some states, it's all legalized now, but prior to this, is it any different in terms of the taxes for each state on how they're taxed for the cannabis here? Or is it like, I know California is pretty lenient on cannabis and things like that, but, some state like Texas, do they tax it a little bit differently? Is there a little bit different of a setup, or is it all the same throughout all 50 states?
It's taxed.
I'll make a blanket statement, which isn't going to be a very good blanket statement. But it'll say that in general, the states tend to follow the lead of the federal government with terms of income classification. However, certain states may have more advantageous tax codes, but they're usually not less advantageous than the federal government. And the installment method that we're talking about and monetizing that for certain types of products would be a federal rule set.
Got it. And also, too, I was just thinking in terms of, I know some buddies that are into smoking, and not me at all. I can never do it. It's one thing I haven't done and would rather not. I hate the smell. I can't stand the smell. But that's just a me thing. I just can't hang with it. I love my buddies, but they do it a lot. I know we have, on the tax on there's like different stuff on the receipts. They have a huge tax on it. Do you think that in terms of the industry in general, like this could be super beneficial to tap into and maybe even deduct prices a lot for people like that, because if you have the growers making a lot less money on it, I mean, chances are the prices are going to go down, right? Simple supply and demand if they're using something like this.
It'd make them more competitive.
It could be,
The ones
yeah,
using it
or they would
be
get
more competitive.
more profitable. One of the two.
Yeah.
Definitely. And I know we talked about cannabis a little bit. What are the other major farms over here, especially in California, that could strongly benefit from something like this?
The almond farmers already provide this. They already provide this to their farmers through their Blue Diamond. This service, like if you're selling soybeans to Cargill, they already provide this, but they're doing it on such a massive scale. It's just nobody's providing it to the people that are like 25 million a year and below. Is they're just ignoring them, which is the vast majority of farmers. Northern California, there's some walnut farmers that Morris, our trustee, has met with, and they're all excited about it. And I'm still thinking of a lot of the small growers. For example, on the coast here, we have a lot of people that grow flowers. Have you ever been to the Los Angeles Flower Mart at 5 in the morning, where they're all
Oh
stocking up to
yeah,
go out to all the florists? Isn't that an incredible place? Don't
it's
stand
great.
still;
It's
you get
amazing.
run over, man. That place is moving. People going all directions in there and stuff. It's something else, isn't it? Yeah. I'm thinking we could really, really help them. So that's the things I'm thinking of. I know of some people that grow alfalfa, and they've got like 46 or 800 acres of alfalfa. And in California, they got 7 or 8 cuttings a year, maybe 9 cuttings. And that they sell to mostly dairy, so they're selling large shipments at once. We could really help them because they're selling millions of dollars worth of alfalfa in a single transaction. So we could really help them. So those are some of the ones we're looking at initially.
Yeah, it's super beneficial for the small guy. I wonder why, or maybe you can offer, either of you can offer some input into this. It hasn't been commercialized until, recently we're starting to have the discussions about it. But why do you think that people like, like you said, Blue Diamond haven't really helped out the smaller farmer who maybe isn't having somebody that's, or does have somebody under 25 million? Why haven't they really taken the time to, push this out to them?
Not worth their trouble. It's a service they provide to the larger growers. Um, it's just not their business, so they have to manage this in house. And we thought about, we haven't done this, but we thought about approaching them to outsource that to us. We don't know that Blue Diamond would do it. We know Cargill wouldn't because they actually want the time value of the money providing that service. It's part of their business model. But it's just not their thing. It's like, the taxes are his problem. Now, if they did, if these groups did provide this service, they could become a lot more competitive. Christian.
Christian, anything else to add?
No, no, I think there's just I think farmers in general, any sort of person that's engaged with growing or working livestock, is just used to putting their shoulders down and working and getting it done. And um, they don't usually have access to some of the higher level attorneys and law firms that specialize in this stuff. But when it's been around for so many decades and it's been so proven with extremely large deals, eventually it's going to trickle down to where it's a common strategy. And I think we're just starting to see that over the past few years, where more and more banks are willing to take on smaller notes once they understand how the structure is. So I think instead of private deals, we're finally starting to see some commercialized deals that are accessible to the small guy. I think it's just a question of time.
Which is great, yeah. And I guess you could say too, even for the small guy, right? I know we kind of took a deep dive a little bit into some of the tax codes and the different things we discussed. What's like a minute I guess you could say, spiel on how you would tell somebody about this. It's like, hey, I say I have a friend that does a lot of stuff in the weed business, right? I go tell him like, hey, your distributor could definitely save, millions and millions if they did this instead, right? Like, what's the best way to describe how this works? Either one of you can take the lead here.
Christian?
Hey, I would say that if you want to sell to a pharmaceutical company, this is the right way to do it because it adds credibility the whole way through. And if you've got enough clout to have pharmaceutical grade product and you want to command top dollar for that product, then don't pay the tax on it. Nobody else does. There's a strategy for that that gets you most of it back present day. That's the only way you're going to be competitive with it.
I would say taxes are an expense in every business. And like every other expense, if you don't manage those expenses, they eat you up. They really do. So what if you could set aside every electric bill or utility bill you have in your business, and at effective zero interest, it comes due 30 years later? You could reinvest that money in your business. Well, taxes are just an expense like any other expense, and you must manage it. When you're buying solar panels to get your electric bill down, you're buying a hybrid car as a company vehicle to get 48 miles to the gallon. You guys laugh at my Prius. I like my Prius. So we do all these other things to control our expenses in our business. And then we just look at some tax return prepared by some CPA that didn't even try very hard and say, oh, I guess that's what I owe. No, not if you make other arrangements, you don't. So it's the same thing there. We'll maximize depreciation schedules. We'll maximize stuff like that. But we never take the next step. And that's what this is.
Awesome. And I guess you could say the layout of the description of how it is, right? It's you have, your crop or your agriculture. In this case, it could be the raw cannabis plant or maybe the almonds that we mentioned, you name it, it can be that. From there, we're selling it through the trust to the bank, right? And then the bank is giving us a loan, which is of course not taxable because it's a loan, right? And then from there, that whatever amount of money you have inside, maybe millions, could be more, is used towards your business tax-free, correct?
Yes.
Cool. That's a simple way to put it about, right? I love it. Yeah, it's crazy how sometimes we think things are just so complicated, but when you really look at it, it's like, oh, it's like a couple steps with maybe a little bit of paperwork, but in all reality, it's not that hard and it saves you a lot, right?
Yeah.
Well, I think the right way to say it in this case
you get back,
is that it's usually illegal.
It's legal too. It's completely legal. It's solid in the tax.
Absolutely.
It's not even a gray area. This is a very solid in the tax code thing. But you're getting back 94 to 96% of the money. Now, where does the rest of the money go? Well, the bank's got to be paid for all the paperwork and everything they're going to do, right? All the documents and everything else. So if your tax bill would have been $100,000, you're going to get back $96,000 of that, what would have been paid to the state and the feds. And you can put that money right back into your business. In the case of 4,000 acres of alfalfa, his tax bill is going to be more like $4 million, right? Well, what if you could get back 96% of that to put right back into your business? So.
Make a huge difference, right? Christian, anything else to add? Any closing thoughts?
No, sir.
Sweet. Well, we'll wrap it up there. Thanks everybody for coming in. Christian, obviously you're welcome anytime. We loved your input here. Kevin as well, always great input. I try to steer the boat a little bit with you guys, but man, it's like I learn something new every time I come in here. It's great. I love it. But thank you guys again for listening in. We'll see you guys next week.
Okay.
Roger that.